Hi, everyone. My name is Ted Gardner. I'm one of the portfolio managers on the Westwood Salient Energy Infrastructure team. Today, we're just going to talk about some of the highlights that occurred during the month of May. From a performance perspective, if you remember, April was not a good month at all. Whether it was the commodities or the energy equities, both got hit pretty hard following the Liberation Day announcements on April 2nd. Thankfully, we've started to see a bit of a recovery during the month of May. The AMEI led the energy infrastructure indices up 2.6% for the month, followed by the AMA up 2.1% and the MLP only benchmark AMZ up 1.7%. However, it's the AMZ that has outperformed year to date, as we've just seen broadly the MLPs outperform the C Corps and Canadian names. So year to date, the AMZ is up 4%. When we look at broader energy, May was a similar story where we saw a bounce back as well, particularly with E&P names as represented by the XOP, who's up 8%. And then we saw the solar names really rally up 14%. And clean energy as a whole was up 6%. So what I find pretty interesting is that after a few years of dramatic underperformance, we've seen the clean energy names outperform the broader energy complex. As you can see, the iClean ETF is up 11.3% for the year. In terms of commodities, crude oil was up 4.4% during May. However, it is still down over 15% year to date. And while there have been some economic concerns that have led to that weakness, we think that OPEC's decision to bring back production is also a major driver. OPEC has said that they will bring back 400,000 barrels per day monthly for the next 3 months. So we've got another 1.2 million barrels a day of production that could be online by the end of the summer. So in our opinion, that puts a cap really on where oil prices can go, because we feel like we're already a bit oversupplied, and this will just add to it. And we could also see some further weakness in crude and oil related equities. Looking at returns for the three categories during the month of May, it was the US C Corps that led with a 6.7% average. The big gainer there was Venture Global, which was up 38%. However, as you'll see on the next slide, it's still down greater than 50% since its IPO in January. We also saw a strong gain from Solaris, which was up 29.8%, following a positive earnings report, as well as an announcement about their joint venture that they have with a large company, which is pretty well known to be XAI. On the MLP side, it was up 1.8% on average, led by Genesis Energy, up 14.8%. Genesis continues to point to a free cash flow inflection point towards the end of this year and early next year. So that has been a big driver of the stock. And as you'll see on the next page also, it's the largest gainer for the year in that category. Canadians were basically flat for the year, although we did see some weakness, notable weakness in Pembina, which is PPL, down 8.4%. Year to date, again, it's been the MLPs that have led the way. They're up 8.8% on average, led by Genesis up north of 60%. But we've also seen strong gains out of USA Compression and Cheniere's MLP. But we have seen some weakness in Energy Transfer. We think that that is really due to increased CapEx, which will bring the company to a negative free cash flow after dividends position for this year. However, we also see the other side of it, that these projects will add to future growth. So it depends on how you want to look, which side of the coin you want to look at there. C Corps were down 3.3% on average through May. Again, the biggest detractor was Venture Global, down 53.6%. We've also seen some notable weakness in Kinetic and OneOak, while Antero Midstream has led the way, up 28.9%. And then two natural gas related names, Williams and Cheniere, were up 12.8% and 10.8% respectively. On the Canadian side, they're up 3.4% on average, led by AltaGas, which is up 15.5%. As I mentioned a moment ago, we believe that OPEC's decision to ramp production could create some further weakness in oil prices as well as some of the associated equities. However, on the natural gas side, we believe that the story is still very much intact. And there have been a number of data centers that have been announced, and we are starting now to see some pipelines related to that demand growth be announced. So in this table, we break it down in terms of those related to utility demand as well as the LNG supply. So utility-wise, we've got 8.1 billion cubic feet a day of capacity that is now under construction that should be in service in the first half of 29 when most of those data centers come online. When we look at those pipeline projects on the LNG side as it relates to the timeline of the export capacity in service dates, they largely match up. Specifically, if you look through 2027, we'll have that full pipeline capacity of 16.55 billion cubic feet a day online. And at that point, we'll have an additional 11 billion cubic feet of demand from the export facilities, which are well supplied at the end of 2027. But we'll have another 7.7 billion cubic feet a day of export facilities coming online in 2028, which will more than consume the remaining capacity. So we could see some more pipelines or expansions of pipelines announced as we move towards those in-service dates. So overall, we continue to believe that the natural gas story is intact, and we are seeing the natural gas pipeline companies start to take advantage of the opportunities at hand. Thank you for your time today. I hope it was helpful. If you have any further questions, please reach out to your Westwood representative.